but to a different economy. And it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers. But we're not going back to the same economy. We're recovering, but to a different economy. And it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign of what's going to happen to these other workers moving forward.
There's shorted for GameStop than there are shares issued. Think about that for a minute. That means these exchanges, these regulated trusted financial institutions, the New York Stock Exchange and NASDAQ and so forth, they're allowing these brokers, these hedge funds, to sell more shorts than there are shares. How does that happen? Somebody's committing fraud. You can't sell something you don't have. Somebody's lying. And they caught them in their lie. That's what happened yesterday over the week. Somebody noticed, hey, it's like 130% shorted of the total issuance. That doesn't add up. If we attack this, they're going to be screwed. And they are. So that's where the price got driven up to $350. And all of these hedge funds had open interest under $200. This company, Melvin Capital, who's owned by, we'll come to it, but they're a subsidy of another bigger company. Somebody in the chat probably knows. They got out of their position, but there's still 15 million options under $200 that have to be settled by the end of the month, which means if the price doesn't go back below $200, all of those people will have to go out and buy shares on the open market at $350, where it was this morning, in order to close their position, which means the current price would absolutely skyrocket because there'd be a bunch of buyers who have no choice but to buy 15 million shares at whatever price. And so these bunch of retail investors now have these Wall Street hedge funds by the balls, okay? And what happened today was an absolute eye-opener for anybody that thought this was a fair, regulated system. It is an absolute rigged casino. These bitches are out here crying like babies because they're targeting the rich. When the reality is the rich have been taking advantage of the poor. The Goldman Sachs gangsters call their clients Muppets. Do you need a further explanation after knowing that? That's how they talk about you. Those of you that have money with Goldman Sachs, they think you're Muppets. They tell their high net worth individuals, their institutional clients, one thing. They tell the retail traders exactly the opposite in so many documented cases, time and time again. And they're like, well, I mean, this is just an isolated case of the left hand not knowing what the right is doing. Bullshit.
That control your ability to trade. This army of retail investors, they caused a huge loss, like $3 billion, and they had to seek capital to stay solvent. It's just fascinating. I want you to now listen to this portion just a little bit here.
What has turned into the soap opera and saga of the markets right now, and that is the story of GameStop. The news to bring you right now is that Melvin Capital Management, this is the hedge fund that had shorted this company that had effectively been attacked by an army of investors trying to push up and press up the stock of GameStop along the way. Melvin Capital is now out of the stock. They got out of the stock, from what I understand, yesterday afternoon. I just got off the telephone with Gabriel Plotkin, who runs that firm. They've taken a rather huge loss. I do not have the full number on what that loss looked like. As was reported yesterday, both Citadel and Point72 have infused something on the order of close to $3 billion into Melvin Capital to try to shore up its finances. And Gabe Plotkin telling me just moments ago that the speculation that the firm would file for bankruptcy is false. There's some reporting taking place on Reddit where so much of this discussion began and really created the momentum for, as I said, an army of investors using options to try to press up that price. To some degree, they might be able to argue now that they succeeded. If this was really about vanquishing, if you will, Wall Street or vanquishing a hedge fund manager, in this case, they did take a loss. They may not put them out of business, but boy, did they come close. We've been following the story, which has been such a wild one. GameStop shares right now. I mean, I didn't even know to say it's 131%, $342 on any kind of fundamental basis. If the stock were worth more than $20 or $30, I think it would be something to behold.
So these traditional platform people just don't even know what to think. But somebody really does know what to think, and this is Chamath Palihapitiya. I know I'm not saying that right. I want you to listen because he is really chiming in, and he has a lot to say on this subject, and it's fascinating.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and frankly a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as a bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs. And they've always wondered, like, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell.
So point is here, the NASDAQ president, Adina Friedman, she revealed on CNBC that they were monitoring the social media chatter and they were going to halt stock trading if they saw that the chatter was matching unusual activity in stocks. This is exactly why we need a decentralized platform. I just can't even believe she said what she did. And I will show you here that he is someone who is a billionaire. He's also an early Facebook executive. He does own BTC, and he's going to probably run for California governor. He has his eyes on running. And I want you to listen now to one more portion of what he was saying.
The only thing I'm concerned about is that there are inevitably going to be people who get hurt. I'm not talking about hedge fund managers. I'm not talking about them. I'm talking about the people who follow people into the trade, who think that this stock is going to continue to go up because that's what they've been conditioned to think in the pandemic. Because all stocks go up, apparently. What
should we do? Not allow folks. Here's what will happen if you follow your logic. Then you'll say, you know what? Retail doesn't know what they're doing. I think you're wrong. Then the thing will be retail shouldn't be allowed to participate in the stock market. I think you're wrong. And then you know what will happen, Scott? The inequality gap will grow and grow and grow. Because then what are they supposed to do then? Buy an ETF, a passive fund? They can't buy the hedge funds because the rules don't allow them to. So now systematically what you've done is you entrench poverty.
No, I mean, that's taking it too far. This is just accentuating those thoughts that Wall Street's a casino and nothing more. The only thing I'm concerned about is that there are inevitably...
So it's always, we need to protect the retail investor. Oh, come on, guys. The retail investor is in crypto. We know the risk. We know the volatility. You don't need to protect us. Obviously, the SEC is doing its job, right? Yeah. Tell the retail investor, who, especially those that own XRP, that they are being protected. So until Ethereum 2.0 proves itself, should we wait? Well, I'm going to touch on that also. But I want to just play one more little bit of video, and this is the co-founder of Reddit, and he too has a very insightful comment.
I do have to say, when I watch what happens with this, I worry about the retail investor.
Everybody's worried about the retail investor.
Following other people's bidding. Chamath got into this stock, but he got out of it before he came on yesterday to talk about how he had gotten out of it. I don't know who he thought he was selling those shares to, but I doubt it's the short sellers.
Yeah, look, I think what's really remarkable here, and I've been on here over the years talking about things like Bitcoin, which I'm obviously still continue to be pretty long on. I think we're seeing cryptocurrency as one example of this bigger story where I think people are looking for more opportunities to have more influence over every part of their life, including, in many cases, very importantly, their money, their investing, and the access to knowledge, the access to information, access to world-class technology.
GameStop, Reddit, Robinhood, all in the media for 3 straight days on CNBC. There's a whole lot more to talk about than the GameStop and Robinhood. The reason why they're putting this in front of your face, because they're ready to move this economy over to a digital economy. The same way we had voting is a fraud. They're working on putting voting on blockchain. If you're just in the regular markets, you're not understanding this. That's the reason why I created this channel, because what they're trying to do is move the legacy markets over to digital, which means crypto and blockchain. So they're just only they're going to do is tokenize stock, guys, and put it on blockchain. That's it. Where everything is controlled, automated, no human involved. Remember, they don't want any humanity involved in this. And I've done so many videos explaining it. But when you actually look deeper, that's the reason why if you go to my crypto teacher channel, guys, I did a video all on the GameStop. So guys, we know Citadel is a market maker for Robinhood. It does not own it, but it's a market maker. That's the reason why Robinhood can go and give you trades free of charge. And then plus Citadel is funding the actual shorter, which is Melvin. But guys, don't forget Citadel is a hedge fund. The job is to take your money. They want your data, and the job is to take your money. Just like I said, all this is to get us over to crypto, this fourth industrial revolution. Everything on blockchain, taking the human out of the picture, all the algorithms run everything. I did a video with Ben Gertzel also, who's all about machine learning, algorithms. So guys, please check that video out.
All right, so you can see there's plenty of narratives here. Obviously, the people who have the funds are going to say that, hey, they're doing this to protect investors, but obviously we know that's not true. They say they're doing that because of the volatility. They sell Bitcoin and Dogecoin on Robinhood. These assets are basically all volatility. Don't keep all your money in one app. Definitely, you need to check out cryptocurrency and decentralized finance for this reason. All of these markets are manipulated, and once you realize how they're manipulated, you can use them to make money. This has been Greenman here with the goods. Get up there and grow.